When Mark Zuckerberg announced Metaverse, the rebranding and the project was met with praises. Analysts had high hopes from the social media giants, who promised to change the landscape of social media forever. However, things are not looking so bright for Meta anymore. Celia Pierce, an associate professor at Northeastern University, states, "The Metaverse looks like a virtual concept game from the 1990s. And she may be right. When Meta was launched, there were plans to recruit 11,000 new highly skilled employees from across Europe. Instead, Meta went on a hiring freeze and fired 11,000 employees from its existing workforce. This accounted for nearly 13% of all Meta workers. So why is Meta struggling to find the right approach? Well, unlike Apple launching the iPhone, Meta's product is not physical. Rather, it is a concept, which some analysts say that even Meta doesn't fully realize what to do with. Meta don't understand what industry they're targeting, or what the right audience is. Some experts have suggested that the situation at Meta is similar to what Motorola tried in the 1990s. Motorola spent millions of dollars to create an ambitious satellite constellation network to allow wireless communication. However, wireless communication was achieved for much cheaper, with cell towers being set up. Similarly, Zuckerberg's ambition of having a virtual world is called too expensive, with not enough demand behind it, to account for the massive amounts of money they've spent. It must be noted here that the Metaverse has spent a ballpark figure of $36 billion on the project up till now. Even as it makes the biggest cuts in history, Meta is bent on throwing more billions behind its Metaverse division, which has reportedly lost $10 billion this year and is projected to burn even more money in 2023. And investors are not happy with what Meta has to show for it. The Metaverse primary product currently is the Horizon World. In initial company documents revealed by the Wall Street Journal, Meta expected to have nearly 500,000 users for Horizon World by the end of 2022. However, they only managed around 200,000 users by that time. As for the virtual worlds built in Horizon World, most of the work has been visited by less than 50 users, with some work getting 0 eyeballs. The number has been steadily decreasing since spring, as most visitors to Horizon Worlds do not return after the first month. The Horizon World game has been heavily criticized for its ugly graphics. Mark Zuckerberg's own virtual selfie, in front of the virtual Eiffel Tower, ended up becoming a viral meme on the internet. One of the primary factors as to why the adoption rate is so low is that VR headsets are not cheap. For Meta to make a really big change in the market, they will have to create a more user-friendly product for everyone to use. In a survey conducted back in November 2021 by Statista, 68% of Americans said that they were not interested in virtual reality projects. The widespread adoption of the Metaverse will require a major paradigm shift. Not only do people need to embrace the idea of socializing in virtual reality, but they also need to have some functional understanding of next-gen technology like blockchain and NFTs. Meta has faced significant backlash for its past mishandling of user data. This lack of trust has made it difficult for Meta to convince users to enter the Metaverse, as many are hesitant to provide the company with even more personal information. This can be linked to the intimidation caused by newer technology. The VR world promised by Meta is not popular among older populations, but is driving some support among younger audiences. Analysts say that for Meta's project to work, they'll have to aim the Metaverse at consumers aged 35 or younger, to get the maximum users. Meta is also facing huge short-term challenges. The introduction of new privacy rules by Apple meant that Meta was not able to use user data for targeted ads as effectively as they had done in the past. This meant huge losses in revenue for Meta. The Apple privacy policy changes, called the IDFA policy, struck Meta with a $10 billion loss over the year of 2022. The ad sales revenue lost as a result accounted for 8% of Facebook's yearly income. As such, the market was quick to react, with Meta's stock price dipping 26% after the IDFA policies. And Meta isn't the only company losing out. Snapchat's stock fell by 18%, Pinterest by 11%, and Twitter by 8%. And the situation is going from bad to worse, with 61% of Apple users opting out of sharing their information to third parties like the Facebook ads platform. Mozilla's Firefox and Apple's Safari have already started the phasing out of cookies from their platforms for better user privacy. And market leader Google Chrome might follow them soon. If Google Chrome decides to phase out web cookies, it would strike a fatal blow to the $40 billion market, as Chrome accounts for 60% of global web browser market share. And Meta would lose out even more. In 2022, Meta's revenue dropped down for the second and third quarter by 4% year-on-year, to just over $27.6 billion. This is unprecedented for the company, as Meta has previously been unaffected by any issue that has come its way. Reality Labs, the Meta division charged with creating the technology that powers the Metaverse, saw expenses up 24% year-on-year in the third quarter of 2022 to $4 billion. Its operating loss was $3.7 billion for the period. In a company call back in October, the founder also claimed the company would see significantly wider operating losses in 2023. Earnings per share are forecast to come in at $2.02, down 26% from a year earlier. Still, investors are willing to pay a multiple of 23.7 times forward annual income to own the company's stock, the highest since the end of 2021. Meta is trying to play the long game by trying to pivot from software to hardware. The aim is to maximize sales of their Quest VR headsets for people to access Metaverse. However, with the steep price of $1,499, it hasn't made much progress in the casual market. Meta claims the headsets are for businesses looking to set up in the Metaverse. For most analysts, Meta is providing very little incentive for consumers to purchase the Quest headsets, whether it be business users or otherwise. Alan Vey, co-founder of the Aventus network, said that the Quest headsets were merely a glorified communications tool. Meta's goal with Metaverse is to try to differentiate from other social media giants. This comes as a direct result of the intense competition it has faced from TikTok, which is growing at unprecedented speeds. Meta is facing allegations that it ran a smear campaign against TikTok, aimed at making the Chinese giant look suspicious to parents and even politicians. TikTok has been able to gather 30% of all online usage in 2021 from teenagers, according to Statista. Meta platforms in response could only gather 24% usage. With Metaverse, Meta is trying to diversify away from TikTok's growing influence. However, Meta must realize that it's not the only one trying to create an online universe digital space. Companies like Apple, Microsoft, Snap, and Adobe are just some of the names trying to create online digital spaces. The aim is to have the most dominant digital space. Moreover, Meta is struggling with internal issues coming to the surface. Zuckerberg's second-in-command, Sheryl Sandberg, has left the company after 14 years. Sandberg had considerable autonomy in her role as the company's chief operating officer, turning Facebook advertising into a $100 billion a year business. In recent years, she had been increasingly sidelined, which corresponded to Zuckerberg's growing Metaverse ambitions. John Carmack, the company's consulting chief technology officer, also left the company, after losing faith in Meta's progress in the VR space. Simply put, Meta has been acting like a monopoly centered around Mark Zuckerberg, with many long-serving employees losing faith in the future of the company. Instead of innovating, Meta tries to buy off smaller competition to acquire them. A virtual reality startup called Within Unlimited was recently targeted for acquisition, but the attempt was blocked by the Federal Trade Commission. Meta has had a rough year and was the worst-performing stock in the S&P 500 in 2022, after its value fell 73% between the first and third quarters. Align Tech, SVB Finance, Match Group, and Generac Holdings are all stocks that are notorious for their poor performance. Every single one of these still performed better in the stock market than Meta did last year. Meta investors have stated that the shift towards hardware is not what Meta should be aiming for. Hardware in the Metaverse becomes irrelevant. The experience should be the same whether a user has headsets worth $200 or ones that are worth $2,000. There's also a hesitation from developers of Metaverse who don't understand what to build. The VR space has been ongoing for a decade now, but the best applications of it are in the form of games like Job Simulator or Beat Saber. Innovation is next to none when it comes to Meta's VR and AR platforms, as its technology has been deemed too restrictive. Meta's investors want to see immediate results after the company's historic losses and the stock price dropping. Meta needs money to build partnerships and develop products for a user-friendly Metaverse ecosystem, but investors are pulling out of Meta at unprecedented rates. As Meta puts a 30% platform fee on content being sold through its app, analysts point out that Meta is desperate to make some profit margins to regain investors' confidence. Back in October, Meta said that beyond 2023, they expected to pace Reality Labs' investments, such that they could achieve their goal of growing overall company operating income in the long run. According to Barbara Doran of the BD8 Capital Enterprises, the Meta stock is expected to bounce back in the second quarter of 2024. It is expected that by that time, revenues would be back to expected levels, and the current macroeconomic situation would have settled down a bit. The macroeconomic situation of the global economy has meant that Meta has not been able to get as many ads as it would have liked. Companies around the world are struggling to perform, meaning smaller marketing budgets and lesser opportunities for Meta to advertise. Since Meta makes the bulk of its massive ad revenue from within the US market, it helps to take a look at the situation there. The tightening monetary policies by the Feds has meant that spending has been reduced in the economy as a whole. Higher interest rates have forced companies to allocate lesser budgets for promotional activities. Inflation has also hit an all-time high in the country, meaning that consumer spending has gone down as well. Meta is expected to suffer even greater losses, as economists in the US predict the country would be undergoing a recession that will start this year. Meta had seen its ad revenue grow year on year for more than a decade prior to 2022, when the economic conditions set it. This, at the same time that Meta pours in billions on the reality labs for Metaverse, has brought Meta to the dire situation it finds itself in. Despite the tough situation at hand, Meta has to realize that its Metaverse gamble is not coming to fruition anytime soon. And with nearly 2 billion daily users on Facebook, and similar numbers on platforms like WhatsApp and Instagram, the popularity of Meta isn't going anywhere either. Meta is trying to figure out how to monetize its features in the short term, to get better financial returns in the near future. After the concerning financial reports of the second quarter in 2022, Mark Zuckerberg emphasized on the need to monetize the Reels section. Internal data from Meta shows that a major time spent on the Facebook and Instagram apps is on watching Reels. There are more than 140 billion Reels played across Facebook and Instagram each day, which is 50% higher than 6 months ago. Reels also happen to be the one area which Meta has not fully monetized yet. Concerningly, original content on Instagram and Facebook has declined over the years, which makes these apps less attractive in comparison to something like TikTok. To tackle this issue, Meta is looking to add more tools for creators to make their online communities. Meta needs to keep its creators engaged, similar to what YouTube and TikTok do, and provide them with more monetization opportunities. This would make Meta's platforms more appealing to creators for original content. Monetizing short-form content has not proven to be as easy as long videos. YouTube Shorts Payout and TikTok's in-stream shopping program are two examples of ineffective monetization programs for short-form content. Meta tried the Reels Play bonus program, which gave cash incentives to best-performing Reels, but the program has been paused for now. For Meta to be able to benefit from Reels, it needs marketers to crowd the Reels with advertisements, to help Meta get back to its usual ad revenues. To do so, Meta has accelerated the number of creators who are eligible to join the monetization program. Meta is also rolling out Reel updates, for better editing of videos on the platform, and adding features like the Trends destination, which allows creators to pick out popular audios and songs to put in their content, much like TikTok. Meta is simultaneously working with marketers to change the way ads are displayed, so that more brands can create ads suitable for short-form content. So, should long-term investors have anything to worry about for Meta? Well, despite the poor performances of the stock in 2022, the reports of 2023 have been slightly better than expected. In the first quarter in its most recent profit report, Meta posted its first bump in sales in a year, sending its stock surging by 12%. In terms of earnings, Meta posted $2.20 per share, which was much higher than the $2.03 per share expected by analysts. Revenue came in at $28.65 billion, which was higher than the $27.65 billion predicted. Facebook daily active users were 2.04 billion on average for March 2023, an increase of 4% year-over-year, while the number of monthly active people on Meta's family of apps grew 5% on the previous year to more than 3.8 billion users. In October 2022, Meta's stock had gone below $100 for the first time in a decade, after poor revenue showings during the last year. $80 billion was wiped off of Meta's market cap as a result. Net income decreased to $4.65 billion, which was a drop of more than 50% after the heightened costs last year. Since then, Meta has made some significant recovery, and it traded at $243 as of May 2023. This also comes at the same time as Meta announcing a $40 billion increase in its stock buyback, which investors have reacted warmly to. While these are certainly favorable for the company, it is important to note that Meta has been brutal in its effort to cut costs. While Reality Lab continues to add to Meta's losses, the company has looked to fire employees left, right, and center. The 11,000 layoffs in November 2022 were followed by another announcement of layoffs in March 2023. This time, Meta is looking to offload another 10,000 workers, 40% of whom will have left the company by June. The employee morale has been seriously affected by the layoffs, with workers being stressed out. The workforce of nearly 86,000 employees would be reduced to just over 50,000 by the end of the current round of layoffs. Zuckerberg has adopted a much more authoritarian role, going as far as restricting what employees can talk about at work. Meta has also taken away dining options at the headquarters, as well as reducing free company travel perks and other benefits. While the layoffs have increased stock value and improved cost numbers for the company, they have ruined the company culture. Only 28% of employees responding to a survey by Pulse gave a favorable response about their optimism for the company. An internal memo leak has pointed out that employees feel threatened by events like Apple's new data policy, which directly hurts their jobs. Since Apple made the change, Facebook has been using AI to recoup those losses and use targeted advertising without Apple's help. Some analysts have gone as far as saying that the metaverse in itself is a hoax used to create hype around the company to increase its share price. This is because Mark Zuckerberg has never made a serious effort to explain the metaverse shift. Andrew Bosworth, the chief technology officer at Facebook, has revealed to CNBC that himself, Chris Cox, and Zuckerberg spend most of their time on the AI space, and metaverse is slowly becoming second priority, despite the billions that were poured into Quest headsets, VR augmentation, and reality labs. Meta has reportedly stopped pitching metaverse to investors. The hype around metaverses and VR spaces owned by tech giants has died out in light of the generative AI making headlines. Microsoft has fired around 100 employees from its HoloLens and industrial metaverse teams. Walmart has ended its Roblox projects, and Disney has shut down its metaverse projects too. But perhaps the biggest failure of the metaverse era is the Decentraland project, a crypto-based project where people could walk in a virtual world. For an ecosystem that took nearly $1.3 billion, Decentraland only had 38 daily users, showing that demand for the product was not only short-lived, but a terrible miscalculation. So, what's the future like for Meta and Zuckerberg? The company's financial situation isn't as dire as predicted by analysts last year. However, depending on if and when the recession hit, the company could suffer. Meta has around $41 billion worth of cash and cash equivalents, and investors hope that their current climate would soon phase out of the way. Long-term investors can expect significant payouts by 2024. The company should also try to depoliticize the culture at its offices, as reports suggest that an increasing number of longtime employees are looking to join Sheryl Sandberg's approach and leave the company due to the massive uncertainty and the fear of dismissal. While Zuckerberg's dream of a VR and AR revolution has no significant ecosystem around it to grow to the levels that Meta's CEO once thought it would have, it is still a possibility that Meta continue to find a way to recoup some of the losses of Reality Lab by selling hardware like the Quest headsets and focusing on creating recreational VR games like Roblox and Minecraft, instead of the business-oriented approach that Zuckerberg was pitching to investors. It is also very possible that Meta joins the likes of Microsoft and Google in the AI race, as generative AI has caught the attention of the world. It is yet not clear how Meta looks to enter this sphere, and how it challenges the monopoly of Google, but it is almost inevitable that they'll use AI beyond simply the targeted ads model that Meta have used. While Meta has suffered greatly over last year's first 3 quarters, it may well make a comeback, despite the metaverse dream ending abruptly. Meta's next moves could shape the company's identity in the coming years, and Zuckerberg needs to ensure it's for the company's best interests.